Hi, good evening, partners. Thank you for joining in the call. Today, as you are aware, we are going to launch our consumption fund from 1st of December. On the call, we have our head of equity, Sanjay Bimbalkar. We also have the fund manager for consumption fund, Mr. Vinod Malviya, and we also have Anurag Sharma, our zonal head for West and South. Before I hand over to Sanjay, we'll give you the why we are launching the consumption fund now. We believe that the coming years are going to be a consumption boom in India, and the background of it is, the investment cycle started 4 5 years back, where the government was doing capex mostly, and the growth was coming from the capex done by the government. Corporates were hesitant to do capex, couple of years back because they were waiting for the demand to come back in the system. After the tariff was announced on India, India took some measures to revive the domestic consumption. The first was the income tax rate cut, which happened, and 12 lakhs, like there's no tax. The second was the GST 2.0. We believe that the time is right for the consumption cycle to play out for next many years. And for that, we have Sanjay and Vinod over here. And Sanjay and Vinod will take you to the presentation, and Anurag will handle Q&A towards the end. In the meantime, if you have any questions, you can keep typing it, on the link. We'll take as many questions as possible. Thank you, everyone, once again for joining in. Over to you, Sanjay bhai.
Sure. Yeah. Thanks. Is the screen visible? Yeah.
Yeah. Yeah.
Great. Thank you, Saurabh. Good evening, everybody. As Saurabh mentioned, we are launching a fund which is focused on India's consumption story, and we are starting the NFO from 1st December of Union Consumption Fund. So, to tell you briefly about consumption story, as you know, it's a significantly large part of our GDP. 65% of our GDP is dependent on consumption. And we believe that consumption story was there and will definitely be the key pillar for India's overall economical growth over next decades to come. It's a multi-decadal opportunity for Indian investors to capture over a period of time. We believe that because of the four key pillars, which we will go through in presentation in detail, India's consumption story is quite strong. And there are significantly diverse set for India's investors to focus in the consumption story as well. We believe that as income increases in India, overall Indian consumption basket is changing, and there are significant nuance changes which are happening within the Indian consumption story as such. To capture that, we have also come out with the framework, which we believe would be significant in terms to capture the overall value creation for India's investors. So let me talk about the overall Indian consumption story, and we will unravel the India's consumption story as we go in this presentation. So as you can see, overall 56% of India's GDP is from private consumption and 9% is through government consumption. That is how the overall 65% of India's GDP split is actually taken care by the overall consumption story as such. And as you know, overall economical cycle growth, which is happening in India, through higher consumption, there is a better capacity utilization where the corporates regain the confidence to start the new capex cycle. And this overall capex cycle has a multiplier effect, which leads to even increase in per capita income over a period of time, leading to higher consumption. So that's why the chart on the left side is in terms of orbit or spiral rather than a circle. We believe that this spiral is likely to increase over a period of time and unravel a significant value creation opportunities for India's investors. There are four key pillars of India's consumption story. Through rising income, urbanization, favorable demographics, and technological advancement. We believe that as income levels are increasing, the expansion in upper middle and higher income household is leading to a significant growth driver for India's consumption story. So if you look at CY23, where 11.3 crore households were in that bracket, now by FY30 expectation, we are expecting almost 18 crore households will be in this cohort of upper middle class and higher income levels. There is a shift towards urbanization, which we have already seen and is ongoing in the overall India demographics. There is a dominant share of Gen Z and millennials almost to the extent of 50% of the demographics is constitutes of these generations, and we believe that that is going to propel the consumption to higher levels in the years to come. And this all shift is also accompanied by the on the parallelly by access to internet, how smartphone penetration has increased in India, how social media users are changing, and they are enabling or fueling this consumption to newer levels. Because it is not only ability to consume, the willingness and availability of avenues to consume is significantly different now in today's India versus when it was like 15 or 20 years back. So, as I mentioned, India's consumption story is significantly large, but why now? And these five forces are driving. These are structural forces which are fueling India's consumption boom currently. We believe that not only India's consumer is ready, but even the government impetus or government nudge towards the direct tax benefits, GST benefits, and now the eighth pay commission, which is going to come next year. And apart from that, low interest rate accompanied by the decent monsoon are the five good forces which are going to lead the boom in the India's consumption story in the years to come. So if you recollect, last year in February in the budget, 97,000 crore rupees of benefits are accruing to overall taxpayers. And when we are talking about these benefits, we are saying that cash flow is going to shift from government's hands to consumers' hands. And that will lead to significant shift in terms of consumption in the years to come. Same is the story with the GST benefit, where we anticipate that almost 64,000 crore rupees of benefits are going to accrue to overall investors and consumers over a period of time through the GST 2.0 revisions. Eighth pay commission, as you know, these pay commissions are a decadal opportunity. Last pay commission was in 2016, earlier was 2006. So in 2026, there is going to be eighth pay commission. And our analysis indicates that 3.7 lakh crore rupees of benefits are going to accrue to central government employees and over a period of time, state government employees as well. So as we now understand that India's consumption story has been there for quite some time, and this is, let's put some quantitative aspects to it. So as you know, from 2008 to 2024, India's per capita income has already gone up almost 2.7 times, from $993 to $2,695. And we anticipate or we analyze that that phenomenon is likely to continue even till 2030. Our per capita income is likely to reach to $4,346. Let's connect this per capita income to various household cohorts which are available or which are present in the current India. So the chart on the screen indicates how the situation was in FY23 and how the situation is likely to be in 2030. So as you know, the upper middle or high income level, which is starting at 44 lakhs above income levels, and 2023, there was zero point 0.6 crore households in that cohort. And we are anticipating by 2030, 1.2 crore households will be in that cohort, leading to almost doubling of this cohort over a period of next by 2030. And same is the story for middle income India as well. So from 8.8 lakh rupees to 44 lakh rupees of annual income, we are expecting from 10.7 crore households, that cohort will reach to 16.8 crore households. So almost 65% kind of jump in that cohort of middle income is likely to give good impetus to consumption story. We have taken a pride that we have brought a lot of consumers or a lot of people from absolute poverty to above poverty line now, and similar delta or similar change is also visible in the upper middle high income levels or middle income levels, where the number of households in those buckets are increasing. And we believe that once somebody reaches to that level, the consumption pattern of this household or consumption pattern of that consumer also changes materially. And that is something which we wanted to drive your attention to. Because when we are looking at per capita income of pan India level, we wanted to highlight that within India, there are multiple Indias. There is this set of India where upper middle and high income level India, which is likely to be almost 1.2 crore households by 2030. There is going to be another India which is earning between 8.8 lakhs to 44 lakhs, and that is going to be a significant chunk of the next India by 2030, almost 16.8 crore households. So within one India, there are these multiple levels or multiple structures which are available for Indian consumers and Indian companies and Indian investors to focus on. So, as you know, earlier there was this availability of spending power and willingness to spending power was there. But at the same time, whether companies were willing to give the kind of goods and services which are available globally, and that parameter had changed quite drastically. So if you look at now, if you look at iPhone 17 launches, or if you look at even the new brands of hotels like St. Regis or Ritz Carlton, we are seeing this trend that now international brands are more amenable to launch into India. They are looking to launch into India at the same time when they are launching their products across the developed world or across the other emerging markets as well. And that is leading to not only availability of these products to Indian consumers, and that is what these higher income level consumers or even whoever is having that ability to pay or ability to spend, they are able to take benefit from this availability of these goods and services in Indian market as well. Our internal analysis indicates that India, we are expecting a lot of S curve or S curve paths in the subsegments of Indian consumption markets. So if you look at every level of per capita, as per capita GDP shifts upwards, there are different goods and services which are demanded by those consumers. So if you look at home appliances or if you look at air travel, we expect that around $3,500 to $6,000 levels we have seen a significant jump in the home appliances penetration. And we expect that our internal analysis indicates that those phases are likely to come in Indian markets over next decade to come. And that's why when I started, I said that this is a multi-decadal opportunity for Indian investors because this path or this S curve is likely to be present in various subsegments of Indian consumption market over a period of time. So, for example, home appliances, we expect that there is a potential for this home appliances category to reach from 20% to 80% levels over years to come. And it is not a phenomenon in isolation because a lot of work has been done by the government, by the regulators in terms of energy access, where now energy has reached all the cities and majority of the villages in India. And that is propelling this ability for Indian consumers also to spend on home appliances. If you look at air travel, now with the availability of aeroplanes as well as now expansion in on the plane side, we expect that there is a zero point 0.1 trips per capita. There is a potential for them to reach to 0.4 trips per capita over a period of time. Because earlier, these were the coveted things, very few people used to have access. And now this is becoming more of a necessity that air travel is now looked at a necessity rather than a luxury. And same is the case with e-commerce or fine dining or automobile in the four-wheeler segment as such. Maybe I'll pause here. I will come back at the end and I will request my colleague Vinod to take over from here.
Yeah, I hope I'm audible.
Yes.
Yeah, thank you, Sanjay. Just continuing with what Sanjay has alluded to, as Sanjay discussed that, how the domestic consumption, India's domestic consumption is very crucial for the overall GDP growth and also how it will play a very vital role in, reviving the private capex cycle. Now, moving to forward from here, just looking at this table, which provides how the index, that is Nifty India Consumption TRI, has done compared to Nifty 500 TRI, which is a very diversified portfolio. So, if you look at the last 19 years of history, there are 13 years where the Nifty India Consumption Index has outperformed the Nifty 500 index. I would like to really highlight there are few instances. There are 6 years, which includes calendar 21, calendar 19, calendar 14, calendar 9, and calendar 7, where the consumption index has actually underperformed the broader Nifty 500 index. The reason, if you look at all this particular years, this particular years, what really did well was the non-consumption part of India, whether it being infrastructure, defense, financials, when IT. If any of these sectors really do well, the consumption index tend to underperform the broader index. That has been the big takeaway from this slide. What I would call out. Next slide. Uh, you know, if you look at the table over here, there are a couple of interesting data points to look at. One, if you look at the Nifty India Consumption Index growth, it has been very steady, for last 4 to 5 years. And even if you take a longer history, the growth has been, in the double digit kind of. Uh, you know, One can highlight that FY25, the growth was only 2.8. But one also need to keep in mind that FY24 we had in the base year we had a 33% growth. So if you normalize that, the growth rate has been around mid teens, that is 15 to 16%, which is very much comparable or relatively better compared to Nifty 500. And the most interesting point is the ROE profile of the Nifty India Consumption Index. If you look at the index ROE profile, it has been very consistent at around 18 to 19%, which is again one of the really interesting thing on the when it comes to Nifty Consumption Index. And probably because of good growth which has been getting built in the consumption index and the very stable ROE profile of the index, the price to earning multiple which typically the consumption index get is also relatively higher compared to the Nifty 5. Right. Coming to the Union Consumption Fund, as you are aware, this is a thematic fund. So we will be predominantly investing in the consumption stocks over here. Now, to evaluate how to select a stock within the consumption bucket, we have come with this framework which we have named as RISE, where the R stands for reach, I stand for intermediate, S stands for spender, and E stands for experience. This is the framework which we will be very extensively using to create not only our consumption fund, but even after the funds get launched, we will also keep on evaluating all the consumption stock based on this particular bucket, and ensure that the funds or stocks are selected within that particular bucket itself. Now, starting with the R, which is basically reach. Now, reach basically in our RISE framework stands for penetration. Penetration, if I just want to give a very simple example, it's basically wherever the product or the sector has a low penetration. A classical example would be consumer durable goods like a washing machine, a dishwasher, micro oven, where as we speak, the penetration is in single digit to maybe a low double digit kind of a number. Apart from that, even segments where the distribution reach is currently very limited will also fall under our reach bucket. So this sector will see more of a growth, which will be largely driven by increase in distribution reach, increase in consumption, largely because of the rising in income level, which ensure the penetration level increases, and thus the reach bucket will be focusing largely on the categories sectors which focus on the penetration improvement. The second bucket is basically an intermediates bucket, which we also call enablers. Now, this bucket will focus on ideas or sectors which act as a catalyst for the consumption to accelerate. Again, examples over here would be any platform companies which act as a catalyst for the consumption side, or a financing company which act as a catalyst to ensure the consumption gets boosted. Even companies like credit card companies will also be falling under the intermediate segment. So that's when this sector or the companies which will enable the consumption will fall under the intermediate buckets. The third is basically the spend up bucket, which we also call as a premiumization. In this premiumization, the classical example would be, as the income level rises, the normal tendency of a human being is to consume products which are on the higher price point within the same category. So as the income level rises, we are not going to consume the same product more in quantity, but we will focus on consuming the same product within the same category, but at a higher or with more features or better pricing. Examples would be, within the automobiles. As we speak, if you look at the SUV market's penetration, 10 years back, it was only 20%. And today, as we speak, it is almost 60%. And even on the FMCG side, there are many examples where we have seen premiumization being a larger chunk in the last 3 to 4 years. And going forward, as the income level rises, we will continue to see a similar kind of a story. And the last bucket is basically the experience bucket, which is basically nothing but experiencing tours and travels, the hotel industry, airlines, where customers will focus more on the leisure side as their income level rises, rather than consuming the daily necessities. So again, experience is where we'll focus on hotels, tourism, travel, leisure. This is the main area of this particular. So this is the overall framework rise, where where we will try to evaluate each and every companies within the consumption, whether this companies fit into any of this bucket, and then we will try to select that company into a fund, the portfolio creation. Next slide. Uh, this is basically the list of all indicative sectors which will fall under the consumption fund. This is again an indicative list. Not necessarily everything will be part of the portfolio, and we will keep on evaluating using the framework which we discussed, and wherever we feel that this particular company within this particular sector falls under this particular bucket, we will try to select that to create a portfolio. Slide. So moving to some examples, as we speak, the consumption definitely is really expected to accelerate from 25 to 2030. But if you just focus on the overall size of this particular category, so if you look at the overall India's retail market today itself, it is 83 lakh crore. That is the kind of a number which we are talking about on the consumption side. And if you look at the kind of a growth rate, in the last 5 years, it has grown at 6%. But going forward, 8 to 10% is the kind of a growth rate which is expected on the retail industry. And not to forget that this is again the overall industry. There are categories within the retail industry, like the modern trade side or the quick commerce, the e-commerce, where the growth rate could be even better. The example over on the right hand side, when we see that the retail industry, within the retail industry, the e-commerce industry, the growth rate is expected to be anywhere between 20 to 25% over the next 5 years. And if I want to talk about QC, that is quick commerce, the growth rate could be even better than the e-commerce industry. So there are very good opportunities in the traditional traditional consumption. Within that traditional, if there are buckets, where we will find definitely a lot of opportunity and high growth companies. Next. Moving to the kind of a leisure and eating outside food. So if you look at the air travel in the last 5 years has just grown by 4%. And incrementally over the next 5 years, the growth rate is expected to accelerate to 16%. Now, definitely in the last 4 years, there have been disruption like COVID, which has impacted the growth rate. But going forward, as the income level rises, as the demographics improve, we expect the air travel in India is expected to grow at a very good growth rate of almost 16%. The same with India's food service market. In the traditional days, the eating out was considered to be a kind of a luxury, and there used to be people used to eat outside food only on a particular occasion. It either could be a birthday or a particular anniversary. That was a tradition. But now it has become more like a with nuclear families. Most of the metro cities are seeing nuclear families. We are seeing eating outside food as becoming a very regular activity, and this is where India's food service market is expected to see a very strong. So if you look at the growth rate, which is has been 9%, that is expected to accelerate to 10 to 11%. And again, within this, I would again highlight there are categories, there are buckets like fine dine, there are buckets like QSR, which are expected to even grow better than this 10 to 11%. Uh, on the premiumization, what we have observed is that, if you take an example of India's watch market, India's watch market has grown at 10%, and it is expected to grow at 11%. This is again on industry numbers, but there are companies which are on the listed space which largely operates in the luxury category. When I say luxury, they are largely operating on the categories where they're selling watches worth more than 1 lakh rupees, minimum 1 lakh rupees. So that is bucket, if you talk about it, has been growing at around 30%. So again, a very classical example where, as the income level rises, you will see a lot of premiumization, and this is what is getting evident in their, the growth rate, which many of the premiumization companies are. Same goes with the kitchen appliances. As the nuclear family, becomes a new normal for India, and the income level rises, we will see more and more appliances at household. So a classical example in calendar 20, as we see, there was only, used to be, the growth rate was only 14%, and now it is expected to become even better. Again, the growth rate is getting moderated from 14 to 12%, but the key thing to watch out over here would be, within this each categories, there are buckets, like dishwasher, there are categories like micro oven. There are a lot of home appliances products, small appliances, where the growth rate is, even better than 15%, I would call. Next. On the premiumization, if you focus on the air condition versus the air cooler category, if you look at the last 12 years kind of a history where the AC penetration was very negligible, and because of better power availability over the last 5 to 7 years, the AC penetration has really increased. So if you plot this chart against the air cooler, there has been a 3.5x growth in the last 12 years. This is what many of these premiumization trends which will play out even going forward. Same thing goes with some of the staple products. The classical example is the detergent powder, which in the earlier days we used to use it, but now it is getting replaced with liquid detergent. Again, the pricing point of the detergent, liquid detergent, is much higher compared to a detergent powder, and this is where we are trying to focus that premiumization is something which we will observe going forward on a significant scale, and that will be a big play in India. On the BPC category, BPC, the mass category, again, that mass category, the premium category BPC has been really doing well. And there are, again, good examples in the listed space. There are companies which is in the listed space, which largely operates on the online BPC category, has been doing really well. They have really got very global brands which are coming to India, and they have been doing phenomenally, growing at around 25% on a very steady manner. Finally, the SUV, if you look at the category, SUV category within the passenger vehicle 10 years back, the penetration was just 20%. And, if you just go back 10 years, even if someone wanted to really project this number, anybody would have not really expected that, within the 10 years, the penetration could reach as high as 65%. But this is what the number in the passenger vehicle today is, where we have seen the overall industry growth rate, it's somewhere in mid single digit. And within that, the entry level vehicles are being flat to negative, but the SUV category has been growing in double digit. That is again a very good example that how India's consumption has changed and will continue to change as the per capita or the income level rises. Similar observation was seen on the hotel industry. The kind of a increase in rates what we have seen in the 5-star deluxe hotel room rates has been much higher compared to a 3-star hotel rooms. So as the income level rises, we will continue to observe a good increase in the overall premiumization. Next slide. So this is basically the investment process, which again would be very similar to many of our other funds, and so I will not really spend much time. So finally, I just want to conclude that the as Sanjay has alluded to, and even in the initial comments, Saurabh alluded that the India's overall consumption has been evolving, and it will continue to evolve as the income level rises. We are currently at $2,500 per capita, and as we move towards 4,500 and 6,000 eventually, there would be a significant growth which we will observe in Indian markets. And yeah, not to forget that there are a lot of structural reasons for that. As Sanjay highlighted, there are four structural pillars with pillar of growth in the form of demographic, the middle income household income rising, the tech advancement which we are seeing, and the urbanization which is going to happen. And on top of it, we are seeing a very strong support which is coming from the government as well as central bank in the form of GST 2.0, repo rate cut, the income tax relief which has come in. And not to forget that next year there would be a pay commission, which again will be a booster to the overall consumption. So we believe that consumption has evolved in India over a period of time, and there are significant leg over here for further growth. And we believe the next decade will definitely see a very strong growth in the overall consumption. That's all from my side. I will hand it over to Sanjay eventually for questions.
Yeah, thanks. Thanks, Vinod. So as we highlighted, we believe that for investors, consumption is a significantly diversified opportunity, and that's a multi-decadal opportunity in front of us. And as we mentioned, there are a lot of subsectors to it, which provides us to allocate money into whichever bucket. And our focus will be on this RISE framework, where we believe that the drivers of the consumption are going to be either reach or the premiumization or the new experiences which are going to come, or new products or services which are going to get launched in the Indian markets, as well as there are ecosystem developments like enablers or intermediaries which are going to scale the consumption business up over a period of time. So that is going to be the primary focus from our side to select the stocks and to choose how we allocate money in our consumption fund. So handing over to Anurag for if there are any queries, feedbacks, question and answers.
Thanks, Sanjay. Thanks, Vinod, for the presentation. Let's move on to the question answers. So yeah, there are a couple of questions. The first question is, do you think that it's the right time for the consumption fund, or the consumption has already run up?
No, I think that's a very natural question for anybody to think from. So, as we mentioned, it's a significantly large multi-decadal opportunity for investors, and it is also getting recognized by market because, as Vinod highlighted, the ROE as well as the growth profile of Indian consumption market is materially different than the overall diversified market, and that is also recognized in the kind of P ratio which are being ascribed to India's consumption story. However, because of the current five initiatives which are taken by the government, so on the direct tax benefit, GST related benefit, eighth pay commission, which is likely to come in FY26, as well as even the regulators like RBI have been proactive in terms of reducing rates, which leaves more money in the hands of India's investors or India's consumers or taxpayers. Ultimately, that money, we believe the significant chunk of that money can shift to consumption market, and there would be big boom to overall consumption story over a period of time. And similar patterns we have observed not only in India when there was a seventh pay commission or a sixth pay commission, but also globally when the overall income levels increase, how that leads to increasing in consumption over a period of time. And that's why the focus on having this framework of RISE, where even the spend up or the premiumization is likely to be a significant pillar for our stock selection or when we are looking at these companies. And that's why we are of the opinion that currently it's the time is there for consumption, and we believe that that story will play out over the next decade.
Thank you, Sanjay. So the next question is somewhat related, but let me take it. So the question is that at the ground level, there is no that the consumption has been very slow of late for the last couple of quarters. Amidst this and a range-bound market, how do we look at managing this consumption story? So I believe the gentleman intends to ask that the consumption has been weak at the ground level, and how will the consumption funds perform in a range-bound market with respect to the slow ground level consumption?
Yeah, maybe I'll start and also request Vinod to add in. So, in a way, it is right with respect to certain categories. So, for example, if you look at FMCG, if you look at, let's say, some of the, let's say, mass market brands, that has been the true. Because what happened after COVID, there was a K-shaped economy, and ultimately the bottom of the pyramid got significantly impacted by that, leading to significant pressure in terms of the lower strata of the consumption basket, and leading to slower consumption in last couple of years. But we believe that government has also recognized this problem, and that's what is leading government to give these benefits in terms of direct tax, in terms of indirect tax, in terms of RBI cutting proactively, and also the eighth pay commission, which is going to give more money in the hands of consumers. So we believe that the observation is right with respect to certain categories, though I don't want to generalize it, because there are certain categories where we are seeing significantly faster clip of consumption. At the same time, corporates are also evolving, because see, if you look at the products like air fryers, or if you look at products like hair straighteners, we have seen these are the new products or services which are coming in into Indian markets. I highlighted about the fact that how even global brands are taking cognizance of it, and new brands are launching in India at the same time of their global launches. So we believe that the scenario is likely to change over a period of time, leading to which is expected to give good boost to Indian consumption market as such. And at the same time, you are right, there will be certain categories where there can be seen under pressure at any given point of time. And that is where the framework of RISE is likely to help us to try to understand which are the drivers of those companies and focus on those drivers to select stocks. Vinod, do you want to add anything?
Yeah, just a couple of things. So as Sanjay highlighted broadly, just wanted to add a couple of points on that. So if you look at, as Sanjay said, it's not that the entire consumption bucket is not doing well. There are, pockets of consumption which are really doing well. And the second point to note down is, if you look at in Sanjay's slide, the first and the second slide, where we highlighted that 65% of India's GDP is dependent on the domestic consumption. Later or sooner, if you want to really kickstart the growth, or if you want to really ensure your growth momentum continues, GDP growth momentum continues, you have to really ensure that the consumption also picks up. And it has been a very long period where we have been talking about the private capex has not been doing well. Again, as we highlighted that how really domestic consumption plays a very crucial role for to kickstart the private consumption. And there are in this particular quarter, I would really call out that there are companies which have started calling out that there are earlier signs of private capex picking up. And even on the consumption side, also there are companies which are saying that there are very good indication that the second half should really up. And the last thing which I want to highlight is that when we are talking about consumption, really not focusing on the next 1 or 2 quarters, we are really talking about the structural trends, which should be more of a 5 to 10 years kind of a story. And as in our presentation, we have highlighted that how India's overall demographics, how India's overall income level is going to rise. That will ensure that the overall domestic consumption increases going forward.
Okay, so I'll take the next question. It's not exactly related to consumption fund, but the question is regarding our view on IT sector amidst the global issues of AI and the tariffs.
Yeah. So IT sector has been under quite a pressure for quite some time now. We have seen significant shifts even in IT because of the AI related spends, as well as pressure in the developed markets, led to elongation of the contractual terms. So you would have observed that IT companies are declaring significant deal wins. However, the conversion of those deal wins into revenues and profits has been quite delayed. And that is something this IT sector has been facing of late. We believe that India's IT sector has evolved over a period of time. Let it be Y2K problem or ERP implementation or agile story, digital. And we have seen Indian IT companies over a period of time evolving or doing a lot of hard work and creating value for investors over longer period of time. Current patch is definitely a patch which IT companies are under pressure, and that's why our view was to have significant underweight in IT. However, over last 1 year period of time, IT index has also taken a significant beating and has underperformed the broader market quite materially, leading to change our stance to reduce our underweight. Though we are underweight, we have reduced our underweight in IT at the moment, and we are watchful of AI-related developments which are happening in the developed world.
Yeah. So the next question is, Sanjay, will we take exposure towards banking sector in this fund?
So, banking or financing is a significant element in the overall consumption story, but we believe that it's not the core element to the consumption. So, we would be focusing in this particular consumption fund basket. There would be focus on intermediaries, which are in a way financing some of the consumer segments, or let's say credit card companies, which are directly linked to consumption, rather than focusing on the broader banking sector or broader, let's say, infra financing or NBFC sector as such. That's why, as Vinod highlighted, we will be significantly under indexed to banking and financials in this fund versus if you look at the broader market as such.
So the next question, any tentative bifurcation between large, mid, and small? Although I know it's too early to ask, but if you can give a highlight on that.
Vinod, do you want to highlight anything?
So, so we are not really targeting any numbers to be, let me be precise over here, that, we would be having a large cap or certain level of large cap or certain level of mid and small cap. The entire thought process, and the entire thought process on creating the portfolio is using that RISE framework, where we will evaluate each and every companies based on the RISE framework, and accordingly a portfolio will get created. But just to give you some numbers over here, definitely, around close to 60 odd percent would be on towards the large cap. The rest would be 30 to 40% would be on the mid and small cap. But having said, this is again a dynamic number. I'm not really, I will not be continue to hold 60%. This number can be as low as 50, 40% also, and it can go also 75, 80% also, based on our overall view and how the framework select the particular stocks in the consumption basket.
Okay. So the next question, will you be close to the index or have a higher active share?
So idea, as we discussed, was to focus on the framework, and there will be material deviations from the index, because the way we are looking at our framework is quite different than how the index might be created. Traditional way to target consumption also has been look at FMCG basket, look at consumer durable basket, auto basket as such. But our framework is to look at where the reach related lever is there. Actually focusing on the drivers of the consumption rather than looking at the specific sub-segments of the consumption market as such. And that's why we believe that there can be good differentiation between the index and our fund, and the active share can also be materially high. Though we don't want to call out on what would be the active share as of now, because we would be deploying the capital, and then active share will be the outcome rather than the number to achieve right now.
Okay. So the next question is, how does rising disposable income and urbanization contribute to this theme? So Sanjay, if you can highlight the theoretical aspect of it.
So urbanization, as you can understand, that typically urbanization also is linked to how people are shifting from rural to urban, how their exposure in the overall baskets changes. So for example, when somebody, a consumer is, let's say, in the rural area versus urban area, automatically in urban area there is a more gamut of products and services which are available. So for example, access to malls, as you can understand, that it will be certainly a phenomena of very large cities or metros, where you will have significant different palette of consumption goods and services which is available to you because you have or the consumer has access to various malls, and that impacts the consumption pattern of those individuals quite materially. We believe that even having access to when we are talking about, one is urbanization, right, Anurag, and second is
Yeah. Rise in disposable income.
yeah, and when rise in disposable income also happens, there is a significant propensity to premiumize. And what we have seen, particularly in terms of FMCG or in terms of consumption bucket, these are habit forming or habitual things. Once person upgrades, it is very difficult for person to downgrade over a period of time, and that's why these are sticky in nature. And that is what I would like to state in terms of premiumization as well as urbanization aspect.
Yeah. Okay. So the next question is, how often do we rebalance it on a quarterly or half yearly basis? I think may not be very relevant in this context, but if you can add to it, Sanjay.
So fund managers would be tracking this fund on active basis. So almost it's on the live on the daily basis. You will be looking at this fund. There is no set frequency. As and when action is warranted in any of the name or new idea comes up, it will be affected in the portfolio. We don't have any set frequency. It will be on the live basis, like our all other active products. That is how we will be looking at this product as well.
So the next question, I think I'll add, and then Sanjay and Vinod, you can add to it. Among your innovation fund and consumption fund, which fund do we need to select in thematic category going forward, considering the risk reward ratio? So I'll add to it. See, the consumption and innovation are very different themes altogether. Innovation is a very aggressive portfolio focusing on the newness. Consumption focuses on the premiumization and the urbanization themes. So it purely depends on the risk profile of the investor. So while innovation is a highly aggressive portfolio, as we have often stated, consumption will be a very different one, may not be as aggressive as the innovation. So again, depends on the risk profile of the investor and the investment horizon of the investor. So Sanjay, anything to add over here?
Yeah, so let me take this opportunity to also mention what are the risks or how we should look at this aspect as such. So, as Anurag mentioned, there is a newness or innovation theme which is played into innovation and opportunities fund, which we manage. In consumption fund, let's understand what is not there or what would not be the focus of this fund. So typically, IT companies would not be focusing this product, or cement companies, infra companies, normal banks will be under indexed as against the overall market. And that's why this fund will not be focusing on these 4 or 5 sectors which I just mentioned. And that's why that would be an area where we have to consider that innovation opportunities, that product focuses on all the sectors which are available in the market, and wherever innovation is happening within those sectors, that fund picks up those names. Here, we would be focusing on the consumer related sectors within the broader economy. And that's why this banking sector or infrastructure sector or defense or let's say cement and IT, those will be the sectors where we will be under indexed in this fund. And that is something which you have to consider when you are looking at the risk reward of this product and whether it's suitable to you and your investors.
Okay, so the next question is it going to be a top-down approach or a bottom-up approach while we construct the portfolio?
You want to take it, Vinod?
Generally, we follow both. We try to evaluate companies purely from a bottom up, as well as we also take a top down approach on the sectors. So that is a philosophy which we generally use for many of the other companies or other fund also. Same process will be applied over here. The reason is because as there was one question which stated that on the ground the consumption is not really doing well. But then within that, I can highlight there are stocks or there are companies which are doing really well on the consumption side. So that again would be a classical example how purely bottom up, bottom up ideas would be selected. And on the other side, there are categories where we clearly see there is a long runway of growth because of either being a premiumization story playing out, or it could be because of the under penetration which could be there. That would be a top-down approach which we would be evaluating and we will be selecting the stocks on those. So it would be a combination of both bottom-up as well as a top-down approach you would be which we would be using for the stock selection.
Okay. So the next question is, amidst all the sectors like banking, infrastructure, why do we feel consumption as a high run-up?
So we discussed about why we believe it's a multi-decadal opportunity, and we also discussed about there are four key pillars for Indian consumption story to play out for next decades to come. And within consumption story, currently we believe that government impetus on or and the benefits which government is giving on the direct access plus GST related benefits which government has rolled out would put more money in the hands of consumers or investors or taxpayers. And we believe that significant chunk of that money can come into consumption basket. At the same time, as income levels are increasing, there is a good driver in terms of premiumization, which is going to come or which is going to play up over a period of time. Lot of work has been done by the governments in terms of access to electricity, access to roads, even the penetration of smartphones, or if you look at how overall Gen Z as well as the millennials as a consumer class within the Indian demographics is shifting. We believe that these levers are going to play out over multiple years in the India's economy, and that's why we are quite optimistic or quite positive about the consumption story at the current moment.
So the next question, the key driver of consumption seems to be on three fronts: the IT benefit, GST cut, and eighth pay commission. If the status quo on the three doesn't change, uh, where does the consumption growth come in the coming years?
I believe the question is about if these things are absent, then what happens? Is
Yes,
that the
yes, yes,
question?
yes. I believe that's the same question. That's the same thing. Yeah.
Yeah, yeah. So, if you look at overall Indian consumers are highly aspirational in nature, and that's what we have seen how the penetration of iPhones have changed, or how the percentage of SUV, as we highlighted, from last decade 20% to now currently at a 65% levels. How the characteristic of, let's say, quick commerce, food delivery is changing. How we are seeing pickup in e-commerce, and these are not the trends which are there only because of the IT benefits or GST benefits or the eighth pay commission which we are talking about. These are the trends which were anyways there. We believe that they will get accelerated or they will get accentuated over a period of next 5 to 10 years. And these are the key triggers because these are sizable triggers which we talked about. So almost 97,000 crore rupees of benefits in terms of direct tax, or 64,000 crore rupees of benefits in terms of GST, 3.7 lakh crore rupees of benefits in the eighth pay commission. They are likely to accelerate these trends, and that's what we are highlighting.
So the next question is, what is your take on rural consumption?
Do you want to take it?
Yeah, so the good part is that we had a very good monsoon, which was there, and not only this year, particularly even last year. So the commentary which is generally been coming in from many of the listed space, which largely operate on the rural side, is stating that the rural economy is doing relatively better. The main pain point was actually on the urban side, which again, to some extent, has now subside, and probably from here onward, we will see incremental growth coming in from the urban side also. So there are classical examples over here, where we have seen the rural part of the consumption doing very relatively better in the form either in the value retail side or some of the tier two, tier three cities for the consumer durable sector has done relatively better compared to the metros and the tier one cities. So the general feedback, what we're getting or what we are aware is that rural economy or rural consumption is doing relatively better compared to the urban consumption.
Yeah. Okay. So the next question is, will this fund have exposure to manufacturing companies which are connected to the consumer companies? Example like suppliers to the consumer companies, examples auto ancillaries, semiconductors, and so on and so forth, or it's a pure play consumption related companies?
See, there are, as we highlighted, there are 19 subsectors to consumption story. So, for example, one may argue that telecommunication, That is also a part of consumer story. Or auto ancillary is a very large segment which is directly linked to overall India's consumption story. So companies which are directly linked to India's consumption story would definitely be part of it, and fund managers can consider those companies for when they are allocating capital.
Okay. So there's a question on market outlook. How do you see the markets in the month of November? So I believe that's a general market outlook question, not specific to the month, I believe.
Yeah. So I'll quickly cover the overall market outlook. Currently, as you can understand, quarter two results have come through, and quarter two results were healthy and they were better than the expectation. That is the broader fundamental framework I wanted to attract your attention to. We believe that Indian economy is in the upward cycle trajectory. We believe that there are a lot of levers which we not only talked in the consumption aspect, but generally as well. There is a uptick in the cyclical uptick, which is able we are able to see in the overall Indian economy over a period of time. We believe that there are risks with respect to macroeconomic on the global front, which are quite material, which we have to be cognizant of, particularly on the geopolitical uncertainty, tariff-related changes which are happening, which are going to raise the trade barriers again, and the trade lines may again be redrawn over a period of time, which you have to be cognizant, which you have to be aware of. There are material changes which are happening through AI, as well as you might have seen recent changes in the Japanese yield, which are going to have a ripple effect in the overall global economy, which we have to be cognizant of. However, Indian economy is quite on the strong footing. So not only in terms of fiscal discipline, but also on the GDP growth, inflation, currency, we believe that government has done phenomenal work with respect to those. And regulators, particularly on the RBI side, as well as from the government side, there is a good push to overall economic activity which is coming up, as there is a focus on Atmanirbharta and government's call that by 2047 India should be a developed economy. There is a good focus on the India's growth parameters as such. That's why we believe that Indian market, based on our fair value approach, is in the fair zone. So we are not paying very high price for entering into the current equity markets, and that's why we believe that currently we should not be under indexed or lower exposed to Indian equity market. We believe that all the three market caps, large cap, mid cap, and small cap, are equally attractive, because on one side, large caps, there is a limited or lower growth, but their valuation is quite attractive. And on the mid cap and small cap, there are significant bottom up opportunities which are available in those segments. And the growth of those sub segments is also quite materially high. And that's why we believe that clearly the worst is over from the Indian economy and Indian markets perspective. Our hypothesis of positivity is also dependent on how FIs are turning. We believe that FIs or the flows related situation was quite worse in last couple of years, and recently we are seeing flows turning back or positive towards India, particularly in the last month period of time, and that is something which we have to be quite cognizant of. So to sum it up, overall macroeconomic and overall economic situation is quite positive from the India perspective, and risks are external in nature, which we have to be cognizant of.
Okay. So Sanjay, the next question is, can we say that consumption is the only driver of growth that is largely immune to global factors and any tariff-related challenges? And can we position this product in this angle to the investors?
So on the broader scale, though, what you are saying makes sense, but I would like to say everything is connected in the global economies. So if you have significant impact in the IT sector, it will have some kind of implication even for the consumption sector, because IT sector employs a lot of people, and those are also quite premium consumers for from the Indian economy perspective. So, though what the questioner is asking is that whether Indian consumption is completely secluded from the global shocks, uh, broadly the answer can be positive. But however, there will be some kind of second order impacts of all the events which are happening in the global economy, and there will be certain or some kind of implication even for the consumption market as such, because there will be some segments which are exposed to those kind of consumers. So, for example, if somebody is going to buy a house or not will definitely depend on how their job security or how they are able to see the income growth for themselves in next 5-10 years. And if that comes under question, there would be some implications for, let's say, luxury housing or premium housing as well.
So the next question is, recently there have been a lot of IPOs based on consumption. How are we looking at this and how do we evaluate this? I think pretty broad based.
Yeah, it's quite broad-based. So all our capital allocation decisions, we do a lot of work with respect to the bottom-up ideas and understand what is going to be the fair value, what is going to be the return expectations from them. And if things are making sense to us from the fundamental point of view, then only we allocate capital to those ideas. So there have been instances where we have been anchor allocator, where we have allocated anchors in some of the IPO names, and there are multiple IPOs also we have given a skip. But having said that, considering the overall frenzy or overall boom in the IPO market, we have been much more selective, where we have also put the bar very high that which businesses to give capital to, because we also have to assess ultimately from the money making angle that that idea also has to make money for our investors, and that has been the focus from the equity research side, which we have strengthened those parameters internally.
Okay, so the next question is, any investment in global stocks? No, sir, we will not be investing in the global stocks right now. We'll stick to the Indian markets. I am not able to see any more questions. Yeah, I'm not able to see any more questions. So I think that should be it.
Fantastic,
yeah,
Anurag.
yeah.
So
Thank
just to
you.
give a brief
Yeah.
again, so India's consumption story is a significant, large story according to us. It's a multi-decadal opportunity for consumers as well as investors to unlock value over a period of time. And we clearly highlighted how the RISE framework on the reach side, intermediate side, spend up side, and experiences side is going to be the core framework from this fund perspective to select stocks. We also highlighted this will be a thematic fund focused on the consumption sector, and please assess your risk reward accordingly. That whether how to allocate capital in this good opportunity which we are able to see over next decade. So we will pause here, Anurag, and what do you?
Yeah. Thank you, Sanjay. Thank you, Vinod. Thank you for the lovely presentation and taking up the questions. Thanks everyone for taking out your time and participating on this call. Thank you. Thanks.
Thank you so much.
Thank you.
Thanks.